to the Middle East and North Africa Oil and Gas Technology Summit. I hope that you are well and that you're ready for a fantastic day of discussion, of insights and of networking at this virtual conference. My name is Richard Thompson. I am the Editorial Director of MEED. We are the organisers of today's event, and I will be your host and moderator for the session. So the oil and gas industry has always been a leader in innovation. The vast scale and technical complexity and challenges of oil and gas projects has put oil and gas companies at the leading edge of research and development of new technologies and academic programs. But in recent years, we have seen a step change in the pace of innovation. That has been particularly driven by digital technology. And as governments have been striving for better and better asset performance, to extend the life of their oil fields, to improve safety, and most important of all, reduce the carbon footprint of their countries and projects. Technologies such as green hydrogen, carbon capture, 3D printing, blockchain have all really come to the fore. Today, environmental, social and governance factors, ESG factors, are the key drivers of investment in technology, and advances in digital data technology, new materials and green hydrogen are among the new opportunities receiving investment from the private sector and from government initiatives. So today's event, we're bringing together people from across the oil and gas industry, from the oil companies, the international oil companies, the national oil companies, from utilities in the region, from suppliers, from manufacturers, from contractors, from consultants. We're bringing together the community of people involved in oil and gas technology, strategy and investment and projects to look at how digitalization, how automation, how robotics, how new technologies, artificial intelligence, blockchain are changing the way we think, they are changing the way strategies are formulated, and they're ultimately changing the way projects are delivered. So that is all of the functions and the purpose of today's event. It's a fantastic program, and I would like to thank Greg Dearden, who has put together this wonderful program, and all of my colleagues across the MEED team for their hard work in getting this event together. I also would like to thank you, the audience, for joining us today. I hope you find the event valuable and useful, and if you have any feedback or need some follow-up, please don't hesitate to contact me or MEED for assistance. Thank you also for our speakers, for the time, for the insights, for the support that they're giving us today, and hopefully you can get as much out of them as possible during today's events. And last but certainly not least, thank you very much indeed to our sponsors. Without you, we couldn't put on these events, and we really appreciate your support, and we hope that you find today's event valuable for your endeavors as well. So thank you to everybody for being here today. I wish you a great and successful conference, and I'll see you through the day. Thank you. I'm delighted to be joined by Ali Al-Janabi, who is the chairman of Shell in the UAE and Iraq. Ali is a civil and environmental engineer who has had a long and illustrious career in construction, in upstream gas and oil, and in finance. Good morning, Ali. Thank you so much for your time today.
Good morning, Richard, and it's an absolute pleasure to be with you today.
The purpose of today's event, we're looking at MENA oil and gas technology and the potential to transform and improve the industry in the Middle East and North Africa. Keen to hear what comes next. Where do you see the big areas of technology, innovation and disruption for the oil and gas industry in the coming years?
Thank you, Richard. And maybe to start with is, Shell today is really built on, say, 125 years of innovation. and therefore, we're very much part of, using technology, and today the technology that we use is really trying to help us to address a number of key challenges. Climate change being obviously the one that is on everybody's mind, but also to look at other elements that have also impacted us across, more specifically around the COVID pandemic. And therefore, through items like digitalization, and I'll use examples such as 3D printing, blockchain, and other innovations, initiatives that we've really pushed ahead with in Shell. We've committed to remaining agile and really adapting to very much a dynamic future. What does this really mean? For example, we use 3D technologies to print spare parts. We based on what demand from projects are. We try and develop novel equipment and really trying to develop rapidly prototypes that our engineering teams design in the background. And so therefore we really, we try and really push forward with not only just picking what's there off the shelf, but really more of developing our in-house capabilities to bridge the gap between, for example, 3D printing that comes from manufacturers and, for example, what's the requirements of the energy industry. And we actually do that in-house in the Shell Technology Center in Amsterdam. Maybe just to build a little bit further on this, I can use examples where we scan, reverse engineer, optimize, and then print.
So you've talked about 3D printing in some depth there, in terms of extending asset life and spare parts. Is that the sort of the main area where Shell is investing in cutting edge technologies, advanced technologies at the moment? I presume it's just one of many, but where are the sort of main investment areas?
No, look, absolutely. So blockchain is one. So if we're looking at digitalization on the other side of the spectrum, blockchain is something that really we've been quite innovative in and pioneers in. This is blockchain is there. It enables it. It's an ability for us to be able to hold elements such as the certification behind it, and maybe I'll allude to it a little bit later on. But look, it's one of the technologies that we which can bring direct engagement between the energy producer and the consumer, and bringing that level of confidence and between the two is very important. It enables, clearly, from our perspective, communication with counterparts, whether it's on the generation side, on the solar panels, all the way through to the system, and being able to have that transaction in a seamless manner.
Is there a commercial transactional role as well within the oil and gas sector for blockchain, or is it really just about document control and the kind of speed of communication and security of communication?
So clearly the communication aspect is one, but there's also the fact that we've used it for transactions. So from a transactional perspective, I remember the first element that we did is, we did our first transaction was in, if I'm not mistaken, in bitumen. That was almost 2 years ago. That's when blockchain was really coming up. But more specifically now, it's a way of being able to validate carbon credits. And we do have quite an active carbon credits program in Shell. And it's very, very important that you track the progress, the effectiveness of our nature-based solutions, where the carbon capture is there. But what's important is that there is that documentation, and then there's a transaction. But then there is behind it the whole certification that you haven't sold this particular, this particular carbon credits more than once. So you avoid double counting, you avoid double selling it, and that's very, very important. And then, of course, from our perspective, it really helps the quality of the reforestation and conservation projects that we push forward with. So it's an enabler for transactions, it's an enabler for the documentation and being able to have that certification behind it. Because clearly it's there and transparent, and then obviously it enables us on the other side to make sure that the other parts of the value chain talk to each other.
In terms of investment in technology, how much of that is driven by ESG parameters, climate change and decarbonisation, and how much of it is driven by commercial efficiencies and saving money?
Hard for me to tell you what the ratios are, but it's an and I think there's absolutely, with the energy transition, we can only move as fast as society can move, and maybe that's a starting point. And until society moves in that pace, obviously comes with it, there will be coming solutions associated with it, and those solutions will be in the form of, clearly, whether it's nature-based solutions in the documentation that I mentioned to it, or whether it's really looking at handling the energy efficiencies or asset efficiencies, and therefore the 3D printing is one. But there are many more examples that we utilize, whether everything ranging from carbon capture to emissions reductions to tracking emissions, fugitive emissions. So there's a whole spectrum of applications, and those applications clearly will come in, are project specific, but they are absolutely where Shell is, and we've been always a pioneer in terms of research and development and innovation. And so therefore some of those tools we've been spending a lot of time and effort into, clearly before it becomes very commercial, we've been pushing it with our own in-house teams.
Is that the way it works for Shell and for oil and gas, or do you try and keep as much in-house as you can?
No, on the contrary, if anything, we've actually do quite a lot of investments externally, and it's really very much more look at anything from startups to projects specifics. So we do quite a lot externally as well. We've got Shell Technology Ventures, or Shell Ventures is one entity of Shell that has been for many years. We're talking about way before the whole push towards digitalization, almost 2 decades now, where that investment has been there. And many of those investments have come through those collaborations, because Shell can't do it alone. And I think one thing is just to recognize that as an energy industry, it really is all about collaboration. It's making sure that we get our supply chain, the vendors, the energy solutions type of providers really coming into the thought process. And it's not just really about just developing in-house, but where we do see shortages, absolutely we look at developing some of those in-house. Yeah.
And you are chairman for Shell in Abu Dhabi, in the UAE, and the UAE has a long-term vision to be a leading country in digital technology. Do you see Shell getting involved in more and more of that in Abu Dhabi and in the UAE?
I mean, obviously, with our relationship with the UAE is a very deep one, and in 2019 we celebrated 80 years of presence in country, very much underpinned by the relationship that we have with ADNOC and Abu Dhabi, but also in Dubai, where it was almost 55 years ago, where we also started undertaking activities, starting off actually with the aviation sector. And if anything, there have been last year, it was last year, yes, it was so long ago now. 2020 is when I launched the carbon offsets and very much the looking at energy solutions type of activities in the UAE. So whilst our roots have come from the gas processing and the oil development, and that started off in 1939, but very much moving quickly. So what we do, for example, with ADNOC is we are a provider of technology solutions, not only to projects that we invest in, but almost a support. So for example, carbon capture and sequestration, hydrogen, H2S sulfide removal. And then these are some of the flagship projects that ADNOC is actually undertaken today, not necessarily where Shell is present. So we do support, we do play a presence. Last year, for example, when I launched the carbon offsets program, we were hosted by Masdar at the Abu Dhabi Sustainability Week, the World Future Energy Summit in 2020, and Shell was the carbon offsets partner for that forum, which basically meant that we underpinned and we undertaken to offset the whole footprint associated with that conference, anything from presence, people, to events, to logistics, and so on. And it's really underpinned by getting CO2 emissions reductions that get generated and compensated through our nature-based solutions. So that enables the other side of Shell, and we do have a portfolio of nature-based solutions and projects that we work in, where we do investments. The Azul project park in Peru is one. There's a few others in Indonesia, and we do quite a lot. And what's important, of course, is back to the point that I mentioned, is the verification process. It's very important that what we offer is also verified and certified. And so therefore, for every ton of CO2, It's there and it's registered, and that's where the likes of blockchain becomes an important aspect of it. So it's all fits together.
In Iraq, you are also chairman for Shell in Iraq, and Iraq is a very different operating environment to the UAE. Where do you see your focus on new tech and advanced technologies in that market compared to, say, the UAE market?
No, absolutely. I mean, if I look at how we advance, so in Iraq, we clearly still have a large footprint in Iraq through the Basra Gas Company, the joint venture. And maybe just a quick reminder of how important Basra Gas Company, not only just to Shell and partners, but also the government, but also to it's the largest gas flare reduction project in the world. It's one where very much parts and parcel of the whole energy transition story, and clearly has a huge impact in terms of the carbon dioxide and the methane that's being flared, and then turned into use by the country, into commercial use to power plants, and but also industry. But specifically on tech, absolutely, it's there. I mean, I remember in 2012, 13, when we first started looking at, we had the Majnoon project, for which we were the operator. We had a collaborative working environment, which basically meant that you've got the whole virtual team that works with you side by side, whether you are on site in Basra, or whether you are here, or whether you are in the offices in Baghdad or Basra. All of that is connected. It's a full screen wall. You almost feel you're talking just the way that you and I are talking, but almost, and the ability for you to basically cut out space, the distance between people was featured back then. Absolutely, with the use of sensors, with the use of clearly all forms of different types of inspections, whether robotics and others. Absolutely, they play a key role, and we have mobilized and utilized those in Iraq. So I think it's really about projects' needs. It's about where we as Shell will come in and step in and provide the latest technologies. So it's really it's important. But of course, it's, as you correctly said, the UAE is in where it is today, and its intent and the strategic intent by the government of the UAE is very different to the intent in Iraq. Yeah. But it doesn't mean that one is more important than the other. Both are being addressed by Shell. To
round off, I'd like to look sort of further into the future. Where do you see oil and gas technology developing in several years down the line? Do you see the AI, artificial intelligence, is the key to the future? Is it 3D printing? Is it something that I've never heard of? What do you envisage, and what does Shell envisage as being the kind of game-changing technologies 5-10 years down the line?
I think it's an and Richard. So 3D printing is clearly we're just on the start of that journey. And digitalization is going to play a very, very important role, because it makes commercial sense. It also makes sense in terms of what we're all aspiring to do, which is move in step with society in our energy transition. And what's good is where the energy industry has been before. There's a lot of applications that are still relevant. Take, for example, the offshore wind. The basis of offshore platforms is something that the oil and gas industry has been very much part and parcel of bread and butter of the Gulf of Mexico or the North Sea, or some of the offshore projects. That is actually very easily deployable to start looking at offshore wind. I mean, that's one of many examples. So I wouldn't say that what we have been doing in the energy industry is something that we throw out. On the contrary, it's something that we build on and move forward. Carbon capture and sequestration. Abu Dhabi is doing it. We have done it. We are actually the pioneers in terms of carbon capture. We've got the first one that's there in Canada that produces about 1 million tons a year. And the UAE is got Al Riyadh here, and it's moving to going from 800,000 to increasing that by 5-fold. Absolutely, these are types of collaborations where you have a geoscientist and a subsurface person that used to produce oil. Now the question is, how do you apply this back into sequestration? So I think a lot of these applications that were there will probably be our transferable skills, and that's probably one important one. Digitalization will be an element that will be there and will play. And then there is the application of the future technologies. For example, synthetic fuels. As we move towards a lower carbon footprint, It's not just about supplying the molecules today at a low carbon footprint. I think that's where the whole world is heading. But also there is the energy of the future, and the energy of the future is not just only about electrons. It's probably looking at biofuels, looking at then the next generation of synthetic fuels. And we in Shell, for example, have our strength in some of those technologies where we have gas to liquids. You can certainly look at hydrogen to fuel. You can look at waste to liquids, or waste to fuel, waste to power. All of those are absolutely where Shell's strength is. And we've got technologies in hydrogen. We've got technologies in the synthetic fuel side. We've got clearly the technologies in the carbon capture. So these are three pillars that I'll talk about, but then underpinned by the AI, the technologies, the blockchains. Clearly, all of that has to work hand in hand.
Where do you see the obstacles that the people watching today's event and the people who are in the oil and gas technology space, they can make a difference? What are the sort of obstacles that we can remove now, or we can start thinking about now?
I don't want to scare people off, but it's really about reconfiguring our energy system. And that's going to take time. So I think maybe the first starting point is it's not going to happen overnight, and it's going to be a journey. And I think we all have to be together in that journey. And again, I go back to the point, you can only move as fast as where society can move. I mean, we were the pioneers, for example, in hydrogen. Some 25 years ago, we were in hydrogen, and we had a hydrogen business. But hydrogen wasn't really in the demand because the consumers didn't really take it into, whereas now, fast forward, we're now looking at hydrogen fuel stations across Germany, across Europe. And I think it's where the ability for the energy companies, where can we play? And then in certain countries, we have a retail-based retail stations. I mean, I can give you an example. Our retail stations, we've got 46,000 retail stations around the world. And and that's more than McDonald's, more than Starbucks outlets. And so therefore, it's that customer intimacy that has to come in, because it's really what the customer decides. And here is the customer being the average person on the road or on the street, driving their vehicles, and the transition is from the liquid fuels towards electrons, and then to other synthetic fuels. Or the other one is business to business, and it's really where and we've got these great collaborations that we've got around the world. A few maybe I can just throw in there. You've got many companies, for example, who tell you, Shell, please supply me with green energy, irrespective of where I am. I want it to be green. And we've got these great collaborations around the world where we've done this, and these are some of the big names that we have around the world. The Googles and the IBMs of this world, and absolutely. And that's the type of relationship that when you know what your customer wants and how they want to push ahead with that decarbonization agenda, then we can work backwards. But obviously, we can only do that in step with society, in step with governments, in step with policy. So I think it's going to require a lot of effort. What we do today is going to be a long journey, and it's going to take a couple of decades to get there. And therefore, back to what we do today, absolutely is about making sure that we supply the gas and the oil, because that's what drives the economy today. But it's going to be that transition, and we can only move as fast as how our customers can in the decarbonization agenda.
Ali Al-Janabi, thank you so much for your insights. I think that's a wonderful set of keynote thoughts for our conference today. Ali Al-Janabi, Chairman of Shell in the UAE and Iraq, thank you very much.
My name's Will Scargill, Managing Analyst at GlobalData, and this morning I'll be taking you through a bit of an industry outlook on where the oil and gas sector is at the moment. For those of you who don't know GlobalData, we're a leading provider of data insights and analytics for the world's largest industries across major sectors of the global economy. And through our energy division, that includes the oil and gas and power sectors. So first of all, COVID-19's been a massive shock to the oil and gas sector, as we all know. And due to the lockdowns and travel restrictions that we've seen in countries around the world, oil has seen an unprecedented shock in demand of around 9 or 10%, which has really hit the industry hard. Gas and power have seen significant shocks to demand due to the economic hit of COVID, but without those, with oil being the main source of transport fuels, they haven't been hit. Oil has been the hardest hit sector. However, the economic impact of COVID-19 on the oil and gas sector isn't just limited to the period through to when we hopefully get out of this immediate crisis, but we're going to see that effect from years to come in the effect on the global economy. As you can see on the right-hand side of the screen here, as with the economic shock from COVID in 2020, although we see significant recovery in global GDP this year, hopefully, and for years to come, the overall GDP growth out to 2024 of the global economy is expected to be around 30% lower than the forecast pre-COVID. So we'll see in the long term, we will be poorer as a global economy from COVID. But it's important to note that with the global economy and population still growing, then we will still have growing demand for energy. The results that we've seen from major oil and gas companies in their 2020 filings have shown the big impact that the oil and gas sector has had from COVID-19. And a lot of that is from the big impairments that companies have had to place on the asset values of their books due to recognizing the potential changes to future values of oil and gas. So many of the big super majors have reduced their price outlooks on which they value their assets, with them considering that demand is expected to be lower, but not just this year, but in the coming years, and that potentially will be moving faster towards the energy transition. And you can see multi-billion-dollar impairments that have really exacerbated the income effect of the COVID shock on super majors here. And what major oil and gas companies are doing around the world, not just the super majors, but companies across the sector, is that because of the effect that the COVID-19 shock has had on the sector, capital discipline still remains the watchword. So when COVID-19 hit, we tracked a lot of revisions to 2020 capital expenditure guidance through the sector. And you can see here how those 2020 CapEx budgets were revised down as companies tightened their belts. However, what we've not seen for 2021 as companies have released their results is a rebound to normal levels, but companies are maintaining capital discipline in 2021, keeping reduced capital budgets. And many companies, as we can see, for example, in the integrated oil and gas companies, peer group, petrochemical sector and downstream sector, many of these companies are actually reducing their capital expenditure budgets further for 2021, reflecting the still weak outlook for oil and gas demand growth. Another issue that's hit the oil and gas sector is the prevalence of ESG investment trends. Major institutional investors and banks have set ESG targets and adopted new policies, which have put oil and gas companies at a disadvantage in raising capital. And you can see the big differential. What we've plotted here is the likes of BP and ExxonMobil's share price against renewable power players, Ørsted and NextEra Energy. And you can see that while BP and ExxonMobil have declined in their share price, not just through COVID-19, but before that, that comes against rapid growth in the share prices of Ørsted and NextEra, and through the high amounts of capital going into the renewable sector. So the move away of capital from dirtier industries then is affecting the oil and gas sector as well. So where's the oil market at now? Well, at the moment, the oil market has been buoyed significantly by the OPEC cuts that we've had since the onset of COVID-19 in early 2020. And with the implementation of additional output cuts in February and March and through to April from Saudi Arabia of 1 million barrels per day, the oil market has really been buoyed by that. And we can see that the revised quotas of OPEC Plus have are still significantly below what they were expected to be due to the weak nature of the demand scenario. Whereas early in 2021, the original plan was to have a significant increase in OPEC Plus supply onto the market, and then it would be the cuts would be fully unwound in mid-2022. So OPEC Plus has really been disciplined in maintaining those cuts. However, there's a question mark of how long that discipline can be maintained if demand remains weak for several years, because of the big capacity increases in oil projects that are coming up in the major Middle Eastern OPEC producers of Saudi Arabia, Iraq, and the UAE. There's a lot of new capacity, say for instance, in just Marjan and Zuluf expansions that are under construction at the moment in Saudi Arabia, over 1 million barrels per day of new capacity being added to those projects, and a number of other projects all under construction in these countries where there's a new capacity being built, and there will be pressure to use that capacity at some point in time, particularly if we see that potentially the demand outlook in the longer term because of the energy transition is weaker. And then the other side of the coin on OPEC from in the market scenario to OPEC Plus and their discipline is what's happening to the US lower 48 production. And obviously there's been the idea that potentially shale is the new swing producer, with the price going down to negative levels at some points in 2020. In the US, we saw a rapid drop in activity in US shale, and the industry's really been hurting. But as we've seen the oil price recover and stabilize over the past year, we have seen rig counts in the US lower 48 increase over recent months. And what we'd expect is that the oil price, if the oil price maintains the higher levels that we've seen over the past months for a significant period, then that will add increased pressure to increased drilling in the US lower 48, and particularly in the Permian Basin, which has really driven the shale oil boom in the US. Because if you can see the distribution here of the break-evens of wells in the Permian Basin, most of those wells break even at between $30 and $40 a barrel. So if we maintain a situation of prices of around $60 a barrel, then there's significant margin for operators. Now, capital discipline will be there is pressure for capital discipline in these operators, and particularly to pay back dividends and reduce debt burdens. But that difference between the price, between the oil price and the the break-evens of wells is necessarily going to add increased pressure for at least some of the players in the US to increase drilling. And so the key point here is that both on the OPEC plus side and the US side, there are pressures to increase production as price improves or stabilizes at higher levels. So the expectation would be that we're still in a range-bound price environment and prices can't stay too high for too long. So in the longer term, the oil demand recovery is likely to take several years because we've got aviation taking a number of years to get back, and transport also taking a number of years to get back, and also stabilizing in plateauing at the same time due to the onset of electric vehicles. And really the growth rates in a number of the key sectors pushing global oil demand are dropping or stabilizing, while and petrochemical feedstocks demand is the big driver of oil demand going forward. But as we get out to the latter part of the decade, we're still seeing the market moving towards a plateauing of oil demand. And that plateauing could be brought forward also by the onset of electric vehicles and behavioral change from less travel, both business and commuter travel, from behavioral change due to what we've experienced in COVID. Moving to gas, the outlook for demand on the longer term for gas, or in both the shorter term and longer term for gas, is more attractive. We've had less of a big impact for gas, and heat and power demand is likely to rise along with other areas. And this is driven a lot by fuel switching in power and industry, and particularly through growth in Asia. However, what we see is power is the big driver for gas demand, but there's significant downside risk for that if renewables can grow faster. So while Western Europe is moving very fast towards renewables in the power sector, there's still, in our current base case outlook, there's still a big rump of natural gas being used, and growth in natural gas use in the power sector in the US, India, and China, and the Middle East. Whereas if renewables can increase their share of the power sector faster, then we may see reduced demand for natural gas and a slowing of that demand growth rate, and even plateauing out towards 2030. So what does that all mean for 2021 and the oil market and the oil and gas sector overall? Well, what it means is that due to the pressures that we've seen now and in the coming years from COVID-19 and the energy transition into the long run, there's really going to be a tightening of the belts for the key things are going to be for oil and gas players to tighten their belts and to have strategic shifts. And part of what that means is that, along with the key issues driving the sector forward and that are important in terms of sustainability and renewable energy and moving towards those areas and dealing with COVID-19, then technology themes are going to be very important as companies look to both make their operations more efficient, and as they look to measure their operations also to ensure drive down of emissions to improve their sustainability performance as well. So these pressures all increase the importance of technological adoption to the oil and gas industry. So thank you for your time today. And if you have any questions or comments, please contact us at the email address on the screen below.